Okay, so the question was asked, why do we have all of these journals? And here's the reason. When we first went through in our first unit, we had a service business organized as a sole proprietorship, which means one owner and all of the profits went right to the owner, and plus it was a service business. We didn't sell any products. So there wasn't anything to keep track of like purchases because we didn't have to buy anything to turn around and sell it. Now that we are doing a merchandising business organized as a corporation, we have more things to keep track of to find out whether or not we've made money or lost money. So we have how many journals now? How many did we learn last chapter? 3. How many did we just add this week? 2. So we have 5 journals. Okay? So we learned in chapter 9, we learned our purchases journal, which we use anytime we buy merchandise on account. Then we used our cash payments journal for any time we make a cash payment. And then we used our general journal for our memorandums. Now in this chapter, we've learned our sales journal, which is any time a customer buys on an account from us. And then we just worked on yesterday our cash receipts journal, which is any time we receive money in. Now we're going to be using our general journal, but this general journal is the same way that we use the other one, so it's not a different journal. One of the things that we are going to cover in our next chapter, chapter number 11, we're going to deal with some posting. And when you post, it's really important that you post in the right order, meaning you have to post from one journal before you can post from another journal. You can't just start in the middle and go through because otherwise everything will be out of whack. So for those of you that have been posting not really correctly, next chapter will kick your butt unless you do it correctly, giving you a heads up. Okay, so we have all of these 5 special journals because we have more accounts. And when we have special journals, there's less individual posting because we have more special columns. So when you have special columns, you only post them when? When did you post cash debit and cash credit? At the end of the month. If you don't have a special column for it, anytime that account is being affected, you had to go through and post it individually. So more journals means more information, and we get more data to say how is our business doing for the month. Okay. So for 10.3, we're going to be using our general journal, and we're going to be dealing with the fact that we have customers that have returned stuff to us, right? In our first unit, customers never returned anything to us because it was a service business, and it's not like after we got done babysitting, they'd go back and say, oh no, we want to return that service. That doesn't really happen. But how many times have you gone and returned something you didn't like? Okay? It happens, right? So now here's the thing. The business has to go through and record the fact that you returned the product that you bought from them, and you don't owe the sales tax. And that's going to be the part that takes that additional step, and the fact that they no longer owe that money to us. So when we go through and we have a customer that returns merchandise to us, we're going to go through and we have what is called a credit memorandum. Now, we used a debit memorandum when we returned items to our vendors that we no longer wanted. A credit memorandum is going to be used when we deal with our sales. Think about it this way. Sales has a credit balance. We use credit memorandums. Purchases has a debit balance, and we use debit memorandums when items are returned. So when we look at our first transaction, it reads, granted credit to Wilbanks & Associates for merchandise return $457 plus sales tax $36.56 from S356 for a total of $493.56, credit memorandum 41. A lot of information, all important information, but we got to plug it in. The first thing let's do is going to be our months. Let's do June 3rd. So on June 3rd, we have our customer that returned our product. So we have accounts receivable, Wilbanks & Associates. Are they being debited or credited? Accounts receivable, an asset, a liability, or owner's equity? Asset. Assets at what for normal balance? Debit. Is the amount that Wilbanks and Associates owe us increasing or decreasing? Decreasing, so it must be credited. Okay? So we have an account that we use to keep track of all of the products that our customers return to us, and that's going to be called sales, returns, and allowances. Just like we had purchases, returns, and allowances, we have sales, returns, and allowances. So I'm going to do sales, returns, and allowances. Source document CM41. What is the value of the product that was returned? Nope. $457. Now, the customer also no longer owes sales tax, which means we no longer owe sales tax. Sales tax payable is a liability because it has the word payable in it. If we don't owe sales tax anymore, we have to debit sales tax payable for $36.56. Then we're going to do accounts receivable. Wilbanks and Associates is going to be credited for $493.56. Now, if you do accounts receivable / Wilbanks and Associates, you have to put a slash in the post reference. If you don't, it will mark it wrong. Now, the reason that we do accounts receivable / Wilbanks and Associates is because we have a separate account called accounts receivable, and we have a separate account called Wilbanks and Associates, and we need to put them both in there. Now, June 6th is very similar, except our customer doesn't have sales tax. So it's going to look the same, except we only going to use 2 lines. The date is the 6th. Granted credit to Westfall High School for damaged merchandise, $67, no sales tax from S345, CM43. So we'll do sales, returns, and allowances. CM42 for $67. And accounts receivable, Westfall High School, with a slash in the post reference, $67. Try that on your own. You should be able to rock it out without too much.